Meantime, we're going to talk a little crypto because the crypto market's seeing its fair share of volatility over the past month. Our Mackenzie Segalos is here. She joins us with a look at the trading action. Where's our Bitcoin this morning? I mean,
68. Lower.
68. Yeah. We're still under 70.
Yeah.
What do you think's happening?
So Ethereum dropping below 2,000 as well. In early European trading, Bitcoin has now round-tripped all the way back to where it was the day before Donald Trump was reelected, even after the crypto industry got virtually everything that it asked for, not just from Washington, but from Wall Street as well. So the sell-off we're seeing year to date comes down to three things. First, the ETFs that were consistently buying for virtually 2 straight years are now selling $5 billion net out of spot Bitcoin ETFs over the past 3 months. And on average, those Bitcoin fund holders are underwater with a cost basis around $90K. Ether ETF holders are down even more, about 31% according to 10x research. And when existing holders are sitting on losses like that, it's hard to bring in new money. Second, the Treasury trade is breaking. Strategy, Bitcoin's largest corporate holder, posted a $17 billion plus unrealized loss when they reported earnings last week. The stock now trades below the value of its Bitcoin. So the flywheel that fueled this rally, issue stock, buy more, grow the premium, it's not working. And third, Bitcoin is trading like a liquidity asset, not a hedge. So when risk off hits, it's a release valve, a 24/7 market that investors can tap for cash with no counterparty. So whether it was the October tariff shock or the Warsh nomination that set off this latest sell-off 10 days ago, Bitcoin was one of the first things that sold off. Fed Governor Waller summed it up yesterday. The post-election crypto euphoria is fading, and as firms cut risk, they're trimming crypto first.
So for those who are long Bitcoin, what would be, in this moment, the argument?
Bernstein summed it up yesterday in a note. They said that there's nothing fundamental to the sell-off beside souring sentiment. But to me, that provides little comfort. This all goes back to October 10th.
But isn't this a sentiment? This is a sentiment asset if it's that.
Well, I mean, they would argue that fundamentals haven't changed, 21 million max issuance. But at the end of the day, there are so many more ways to repurpose that same Bitcoin, whether you're looking at the derivatives market or these leveraged ETFs. So that same one Bitcoin is being repurposed multiple times over. And what's concerning to me is that the industry has not recovered from that October 10th record liquidation event. $19 billion in 24 hours, 70% of that carnage happening in 40 minutes. And the industry doesn't know what happened. And so one theory is that a U.S. dollar peg stablecoin, USDE, lost its peg. It had to do with leverage being offered on Binance to the tune of 12%, and it was a washout in a day. Market makers were taken out. They haven't come back online.
And therefore, at $68,000, the smart money says what?
Well, at this point, retail is out of the trade. They've turned to prediction markets. A lot of them got burned in October 10th. They're not coming back in. So when we talk about where smart money is, it's institutional money in two different camps. The digital asset treasury companies, all underwater. I mean, we talked about strategy a minute ago, Bitmine emerged.
We're going to talk to Michael Saylor in a little bit. Yep.
And then the second part of that are the ETF holders, and they're staying on the sidelines. Everybody's underwater on their position. And part of the problem why you're seeing these outsized moves is the fact that it's shallow liquidity when we lost those market makers. So any kind of movement in either direction is bringing it up. The only reason we are hovering in that 60K range is because there's a floor priced in at 60.
But that's the question. So this floor that's priced in at 60, who is supporting that floor?
So basically $60,000 is what it costs to produce a Bitcoin. And so you've got the Bitcoin miners who, below that 60K point, they go out of business.
Right.
And so they are applying most of the marginal selling pressure. So once you get them out of the market, then suddenly you hit this floor. And also 60K.
So you're talking about actual supply and demand.
Exactly. And like to that point, 60K is the point at which the percentage of Bitcoin in profit it drops below the percentage of Bitcoin at a loss. And so that's why it keeps bouncing off of that 60 floor.
That's really, I mean, that you can look at it the same way you would look at oil prices when you consider it that way.
Yes, it's trading exactly like a commodity. Like we're just seeing forced selling pressure to these liquidation events. We're not seeing fundamentals driving the moves in the crypto market.
Does that mean it could never really drop below 60?
At this point where it is, especially with retail being out of the trade and it being so heavily indexed toward institutional, there is a stable floor there at this point. And, I mean, we were having a conversation with Anthony Pompliano yesterday, and he made the point that this bear market is the best one that we've seen. Usually we see a drawdown of 70 to 80% from the market peak. That would be in the 40K range. So we're still doing better. Last week when it was down at 60, it was 50.
What happens if it goes under 60 for real? And how long does it have to stay under 60 to be a problem?
Well, the first thing I'd look at is what's happening to your digital asset treasury names. At this point, strategy, you can ask Michael Saylor about this later. They're not just underwater on their Bitcoin position. Their cost basis is 76,000.
Right.
They're a major driver of sentiment. To your point earlier, Andrew, like that is so much of what's driving the trade. So their long-dated debt starts to come due next year. And they have a cash reserve that's meant to support dividend payments. But if there's an erosion of confidence with strategy, that's a problem.
And then they start selling, and then you have are any of the miners trying to prop up the price right now?
Well, the problem is they can't, right? A lot of them are just selling the Bitcoin that they mine immediately to service debt and to keep their production facilities online. And others have just pivoted to being to serving AI customers instead and becoming hyperscalers in their own right.
The whole thing, I know, one second. The whole, and I'm not saying 1 second to you, I'm saying 1 second to a producer. The whole thing gets super complicated, though. If you are under $60,000, it's not just that people stop mining the Bitcoin, it's that the network becomes more complicated itself because you need all the miners to continue to effectively mine, literally for the whole thing to work.
Well, exactly. And also that was one of the core fundamentals of Bitcoin's use case, the fact that it was a decentralized network. And to have a decentralized network, so you need miners online around the world. And when you start to see so many fold or like a consolidation through M&A, then suddenly you've got a concentration of mining happening in one particular place or with a handful of companies.
This is eye-opening. Thank you. Appreciate it.